All right, guys, so you're back with Dennis, and first things first, we have to talk about how intense the markets have been over the last couple of weeks. So, my portfolio is down, Steph's portfolio is down, and I'm sure a lot of your portfolios are also down as well. So, with all of us seeing all this red, I'm sure a lot of us are wondering what the hell is going on, right? And that's what we're going to essentially talk about today. In today's video, we're going to talk about why all of this is happening and basically what's going on. But we also want to provide a little bit of color around this whole recession topic, right? I've been seeing a lot of articles floating around, a lot of different YouTube videos talking about the recession is here, the crash is here, the mother of all crashes. Like, I'm sure you guys have seen all of these videos and articles floating around. But we also want to talk about the emotional aspect of being an investor, right? For a lot of us who, if you're like me, started investing during the climb of 2020 and 2021, this is going to be the first time you're really tested, right? This is going to be the first time where, things aren't going your way. Everything that you invest in isn't turning into gold. It's actually turning into just garbage, right? Okay, so first, let's just talk about what's been happening over the last couple of weeks. So if we look at some of the major indexes, so the S&P, the Dow, and the NASDAQ, they are down significantly, right? And then even if we look at some of the bigger companies like Robinhood, Netflix, Coinbase, these companies are down anywhere from 60% to 80% just on the year alone, right? I remember at some point last year, there was a lot of people who were funneling a lot of their money into Coinbase because obviously with its affiliate to cryptocurrency, a lot of people were seeing that as another way to get their money invested in crypto. And guess what? You've now lost about 80% of your value, which really, really sucks, right? So there's a lot happening. Netflix, their business model is obviously kind of flawed at this point, right? They're losing subscribers left and right. They're trying to figure things out. On our TikToks, we actually did a video dedicated to this because we're talking about some of the changes that Netflix is going to be trying out this year, like adding ads and stuff, right? So there's a lot going on. If we take a look at also the top 10 holdings in VTI, if we take a look at companies like Amazon, Google, Meta, these companies are down more than 20% on the year, right? Same with Microsoft, right? Another really great company, but it's also down. So before we even get into things like inflation, Russia, Ukraine, China, the food shortage, all of that, what I do want to show you guys is something that I've been using over the last couple of weeks to kind of gauge what the general investor mindset is. So what I've realized is that a lot of people in the day and age that we live in, a lot of people tend to use the internet to find the answers for their questions, essentially, right? So basically what I've been doing is I've been hopping into Reddit and actually seeing what some of the questions that people are asking in these different investment forums. So that's what we're gonna do right now. So I have a couple questions pulled up here that I think give us some insight into where what a lot of people are struggling with right now. So the first question reads, should I stop putting money into my Wealthsimple managed TFSA? Now, to give you a bit of a background on this individual, they say that they're 30 years old, they own their house, they can afford basic luxuries, and overall they have some good long-term savings, right? So the problem lies in their question that they have, or the problem that they have is that over the last 3 months, their portfolio has lost 10%, right? They've seen a 10% decrease in their portfolio. And to give you more context, it sounds like they're using Wealthsimple Invest, so the robo-advisor. And basically they're kind of freaking out a little bit, right? They're saying that they understand that we should buy more now, but they're wondering if everyone is in the same boat or if they need to change up their investments. So before we even address that question, let's move on to the next one. Let's hear the next one. This next person says, should I take a $5,000 loss and sell everything? Concerned about the recession. They say, I have 2 accounts which total about $50,000, down about 10% on both portfolios. I'm concerned a bad recession is coming, which will knock them even lower. Is it worth taking a hit now? So another very interesting question. And to give you guys even more context, I saw so many of these questions floating around on Reddit. I couldn't even, I have a small sample here, but there's so much more. Let's read this last one here. So should I sell my ETFs and buy the dip? This person says, as the title says, I have about 30K in various ETFs and I'm debating liquidating everything and buying back once things stabilize a bit more. Thoughts? I'm closing in on losing all my realized gains, so I would be starting fresh from a net zero position. So There are a couple things that I notice here. There's a couple patterns, right? These people clearly have done a great job by actually getting into the market and starting to invest. But, this is once again the first time that a lot of us are being tried by the market, right? A lot of us were used to those gains that just kept going up and up and up. That this is, for a lot of people, one of their first downturns in the market, right? Now, what I will say is that ideally these people are investing in good long-term ETFs, right? That would be the ideal situation. So if we take a look at this specific person who's asking whether they should sell their ETFs and buy the dip, my question to them would be, why are we trying to time the market, right? If you're someone who is invested in good long-term broad market ETFs, you should be just as excited when the market's down as when it's up, right? Overall, I think it's important right now for us to remind ourselves that we are investing for the long term, and in the short term, we're going to be seeing a lot of, rocky waters. We're going to be seeing ups. We're going to be seeing downs. We're going to be seeing, especially coming off of like the tail end of, the Federal Reserve and the other central banks just pumping money into our systems, right? Now, going back to what we were talking about before, the bond market in particular is not doing great either, right? So one thing that a lot of people tend to look at is the fear and greed index, which looks at the emotions that are driving the market. And right now, it's leaning heavily towards extreme fear, right? A lot of people are being driven by fear. A lot of people, as we all know, right, our portfolios are down. So a lot of us are kind of wondering what's going on. Okay, so now that we have a good grasp on why we are where we are today, something else that I want to mention is around moving forward, like what's going to happen, right? Now, I can't answer the question of whether there's going to be a recession, but what we can look at is what's actually happening and kind of try and take little tidbits from that, right? For example, the Fed and the central banks have basically told us and shown us over the last couple of months that they're moving in the complete opposite direction of what they've been doing for the past couple of years, right? So when we're looking at things like that, what does that say to us? That says to me that we should expect more shockwaves in the market. Now, a graph that I really want to show you guys here is this graph that I got from Morningstar. So we've shown it before, and it basically shows a bunch of different downturns, a bunch of different events, significant events that have happened between the years of 1870 to 2020. Now, one thing right off the bat that I love to point out is the fact that if you look at the market has gone in one direction over the long term. And that's what I always say, right? The market continues to go up, right, over the long term. In the short term, you're going to see those periods of red. You're going to see those periods of downturns. You're going to see those periods where there's limited growth, right? Where companies don't have access to funds and cheap debt, right? This is what we're going to continuously see. Now, the next chart that I want to show you guys is a chart that Wealthsimple did. The chart here basically shows you how much panicking can cost you. So this is a conversation that I even had to have with my dad, because he's seeing his portfolio down right now, and he's wondering what the hell's going on. Meanwhile, it's the entire market that's down, right? And once again, we don't care about the short term. So this does a really good job at showing you why you typically only you only ever lose once you lock in that sale, right? Once you click that sell button, that's the only time that you lose money. So let's look at the chart. So panicking costs about 35.5%. Say you put $10,000 into the S&P 500 in 2006, the difference between panicking and doing literally nothing, $5,000, right? $5,000. Tell me that's not crazy. So basically what we're looking at here is that if you had invested your money, if you're someone who, started panicking because you started to see things go down, you started to see your account go down, what ends up happening is that you miss out on some of those long-term gains, right? And who knows at which point you're gonna feel comfortable re-entering the market. So I think this chart does a really, really great job at showing what happens when you do nothing and what happens when you actually panic. At the end of the day, what I do want to reiterate is that in the short term, we're going to be seeing all sorts of things happening. So whether that's the next couple of weeks, months, years, right? We're like I said before, we're moving in the exact opposite direction of what we were doing before. So there's going to be impacts that come along with that. So once again, if you're investing for the long term, sit tight, keep dollar cost averaging, right? To answer those questions that we saw on Reddit, you got to keep your strategy consistent, right? if you're saying you're investing for the long term, then continue to do that, right? We're not trying to time the market. We're not going to pull our money out before we lose some of those gains. We're not going to pull our money out of the market and then try to pull it back in, right? Or push it back in, I should say. What we're going to do is we're going to keep doing the same thing that we've already been doing, and that's dollar cost averaging, right? Now, hopefully this video is kind of like your gut check, right? I think a lot of us kind of need that, and I think that's what's missing for a lot of people, right? Where a lot of us are going online and we're seeing all these different forums, whether it's Reddit, whether it's talking to our friends, we're seeing people kind of freaking out, and we're almost fueling that energy together. So hopefully that's what this video was, a gut check. With that being said, that kind of wraps things up. Make sure you check out any of our previous videos that we've done. We do have one on recessions, right? It does a bigger deep dive on that. We have one on inflation, so hyperinflation in particular. And yeah, make sure you like down below. Make sure you subscribe right there in the corner, and we'll see you next time.